Hello everybody, welcome to the Fundamental Analysis webinar. My name is Troy, I'm a Senior Account Manager with AvaTrade. I'll be leading the session this evening. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, I've got enough responses, thank you. It looks like we're up and running just fine. If anyone runs into any problems as we go along, let me know. Now, as we get going, as always, keep in mind, all investments have risk. There is no guarantee that any one trade is going to profit. Obviously, you want to risk manage things in a way that makes sense for you in terms of trade size, whether you're going to use a stop loss or not, all of these things that factor into your risk management plan. As we go through things, what we're doing is from an educational perspective, going over concepts and ideas and information that hopefully will be useful for you to improve upon your trading strategies and move forward, hopefully in the end, with better profits, with better results. Keep in mind that what we go over is not meant to be financial advisement, but like I said, it's coming from an educational perspective, and you can read the full risk disclosure statement on AvaTrade's main website if you wish. One thing when it comes to risk, and we'll go over it as we get going after this introduction, we'll go over some ideas on the AvaGo app. There's a feature called AvaProtect that is unique to the AvaGo app that allows you to manage your risk in a unique way over defined time periods. By paying an upfront small premium cost, you can cover against all risk during the covered time period and have actually any losses that might occur during that time period added back by the coverage, and then your trade can keep running. So it's a unique way to manage risk and kind of an appropriate time maybe to mention it since we're talking about risk here on this slide. One thing to keep in mind as we go through the fundamental news and the fundamental analysis is that there are really two main types of fundamental news that we can take a look at. One would be things that are scheduled with regular economic timing, economic events such as jobs numbers, PMI, factory production numbers, these sorts of things that are scheduled for an exact day and time in advance, and you know which country's announcements it will be and what currency it's expected to potentially affect. And so that's one type of fundamental news that you can really plan for in terms of timing and asset being affected in a more regular way. And then the other type of fundamental news is what we can refer to as extraordinary economic news or extraordinary events, such as trade war news, pandemic news, information that you don't know exactly what it will be about or when the breaking news might come. And so that type of fundamental news, really, you can plan for, but you plan in a different way maybe. You wait for breakthroughs, you place maybe appropriately placed pending orders that make sense to you in case news comes that causes a movement. And you wait for breakthroughs because that's confirmation of something substantial maybe happening, okay? So sometimes you plan for the unknown, and many times that can turn out to be quite large movements that you get in early on the movement because you had the pending order waiting in case that type of news hit, rather than waiting until you see the news and then trying to get in. So we'll take a look at both ideas as we go through the fundamental news that exists, as we get on the charts on my demo and go through the live movements and plan for what to do maybe now and what maybe to plan for in the future. Dato, if you can't see my screen, please adjust things on your computer because everything's up and running. We've done a confirmation. Everyone in the beginning could see the screen. So just double check things on your side. Maybe you need to expand the window or something. All right, so as we go along, if anyone has any questions, please feel free to ask or chime in at any time in the chat box. Or if you want to give input, it doesn't have to just be a question. I'm happy to share information, maybe change direction if it's something that we haven't covered that you'd like to talk about. All right, so let's take a look what is happening in the fundamental news. And I did mention as we were starting, as we're going through the risk warning about AvaProtect, which is a feature that's only available if you log into your account using the AvaTrade Go mobile app. So if we go to trading platforms, and if you're using your mobile device then, and you go to the trading platforms area and choose AvaTrade Go, that is our mobile app. And once you download the AvaTrade Go mobile app, then you have features such as what you see here, AvaProtect, which can have protection against all losses during defined time periods for small premium cost. You also see that as you put the trade size, it calculates your margin requirement for you. If you put a take profit or stop loss, it will show in your account currency how much you're risking or how much you stand to make at those marks. So it has a calculator built in the order window so that you don't have to guess how much or manually calculate what you're risking, what your potential profit will be, how much has to go to margin. You really can risk manage in an easier way using the app because you know exactly to those marks, stop loss, take profit, what your potential loss, potential profit would be. And you also have the extra feature of AvaProtect on all the FX pairings and on gold and silver. Okay, so very nice tool to use, or tools to use within the AvaGo mobile app. So it's something to check out if you haven't yet. Now, as we take a look at the fundamental news, the day started out maybe kind of mixed, kind of flat. And so do it. I'm not sure what you're asking. You typed spimming or scalping. We will talk about some ideas about scalping for sure. Maybe you meant skimming or scalping. Usually the terminology I think is scalping with most traders. Short-term moves meant to pull quick profits out of the market. Certainly we'll go over some ideas on the charts today for that, as well as long-term moves. So the European shares fall as fears of new virus wave grips investors. This was earlier today. That's what was happening. A little bit of fear on the markets about the spread of virus, and it's still kind of there. Okay, and you also see Wall Street was the same way, flat as virus cases rise, but with the caveat that the tech stocks were doing very well. And you understand the tech stocks weren't affected as much through the pandemic because people rushed to Amazon, people rushed to Google. They're doing a lot of searches, shopping online. So some of these tech stocks have done very well. You think of the people working from home and using more technology to do things, and so the tech stocks have done well even when others have been flat. And that was the case for a part of the day today. Mohammed, we'll talk a little bit about using stop losses, that sort of thing as well. If you're in an immediate concern about positions you have already opened and you don't want to close them, maybe you could do some hedging just to put things on pause, so to speak, until you decide what you want to do to unhedge eventually. Okay, so this was the general theme. NASDAQ, tech stocks, usually it's the NASDAQ we think of, it's highly tech driven, was doing well all day today, but the S&P 500, Dow Jones, and going to the European indices, they weren't doing so well earlier today. But if we take a look as we go through some other headlines as we get through, and by the way, Google says their ad revenue they think will take a hit eventually. That's a tech stock, right? So maybe the NASDAQ is due to slow down with this type of news. This is a newer article today. Google may be expected to take a hit soon because some of the pandemic may be catching up with even some of the tech stocks now. And then some other bad news. U.S. home sales came out today, worse than expected. All right, and that was on the economic schedule. If we went back, if we want to look, well, where's the economic schedule? We can go to the main page on investing.com, and here's the economic calendar, and we can see what came out. Existing home sales only went up 3.9 million instead of 4.12, which was the expectation. So, okay, not horrible. Almost 4 million existing home sales, but not where it was expected to be, right? Worse than expected. And so as a percentage or as a whole number, existing home sales missed the mark. So that's what we're seeing in this headline here. U.S. home sales tumble to 9.5-year low. Okay, so not great news on that headline about home sales or about Google. Now, if we go on, look at some other stuff. This is positive. New York City opens for haircuts, outdoor dining. That's what's been creating some positive momentum, by the way, these past weeks, are the economy's opening up. But what could put a damper on that? What's the one thing that could reverse that is virus cases soaring. And that's starting to happen in 12 states in the US and other countries around the world. So if economies have to start shutting down just as they're opening back up, that could serve as a stimulus to reverse all the climbing that's occurred recently in the equities, in the indices and the stocks. So it's starting to build like huge potential for maybe giving back some of what's been gained in the past weeks with some of these headlines. This is another negative headline. Third of U.S. shale near technical insolvency. Boy, that doesn't sound good. What they're saying is, shale oil, in order to be profitable, needs to be up around 35 a barrel or higher. And it was below 35 a barrel for so long that the shale industry, which it costs a little more to extract oil from shale than it does from traditional oil drilling. So they're being hit harder because they had to take out a lot of loans to stay open. And they're saying even though the price now is getting up above 35 a barrel, they've taken such a hit and so many loans, they're really in trouble, a lot of these shale oil producers. So I'm seeing some negative headwinds here. Negative article that's not going to go away anytime soon with the shale industry. Negative article about viruses starting to soar, virus outbreaks starting to soar in 12 different states. Negative article about home sales. Negative article about Google. Boy, that all maybe builds up to a potential reversal with some of these equities that have climbed. Okay, so obviously we're not here to say we know that that's going to happen for sure, but we are here to look at the fundamental news and try and see if that steers us a little bit in our decision making. And it's starting to picture a little bit of a gray picture, even though tech stocks did good earlier in the day, driving up the NASDAQ. Okay, so let's go ahead then and take a look at the charts and see what's happening. Everybody type okay if you're with me thus far, or if you have any questions. Now would be a good time before we start on the charts to analyze what's happened. Okay, great. Looks like we're good to go. And if I see any questions pop up, I'll address them as I see them. Okay, so let's look at the FTSE. All right, so we're looking at 1 hour candles. We see a resistance level up here that has stood for quite some time. Resistance. This is going back, last week and even further before it's been above this level, all the way back to June 11th or so, since it's been above this current resistance line. So it's been, a couple weeks, and so we've got resistance, and here it is trying to come up. Now, earlier today, we saw the headlines that Euro stocks and U.S. indices, S&P 500, Dow Jones, that are not so tech-driven, were kind of flat or even down a bit. And you see, this was the direction earlier today, down, 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 and then all of a sudden a little bit of a recovery back up. Okay, but overall kind of flat today for the FTSE. The DAX also kind of flat. We see up, down, up, pretty much sideways, and also a resistance level up here. Okay, we see resistance. If we go to the US indices, S&P 500, we see resistance way up here. Let me redo that. Resistance way up here. There we go. Now the line appeared. And we see also mixed movement, but it's broken to more of a positive than a negative. It was up and down earlier today, and then now it's up near a high for the day. Okay, that's the S&P 500. The NASDAQ also up at a high near for the day, doing even better than the other indices as it's highly tech driven. And then we see the Dow Jones trying to climb to a high of the day, but we see it was more mixed than the NASDAQ as well, more similar to the European indices. Okay. Yeah, we'll look at some currency pairs, Emmanuel. Sure. Absolutely. I'm going to give a note for Stefano. It's just you. Okay. All right. So we see mixed movement, but erring on the side of positive here in the past few hours for most of the indices, and the NASDAQ in particular really is in the positive for the day, being tech driven. Okay, is the key with the NASDAQ. So I think the NASDAQ is interesting to look at right now because it reached this major resistance level. Okay, and if we go to 4-hour candles, it's not just the resistance we're seeing here on the 1-day candles. Look all the way back to last week, and we see resistance near the same level going back to what, June 9th, 10th. Okay, resistance at the same level, it's having trouble now. So it looks to me, if you expect a little bit of a reversal, let's say I think that the bad news is starting to win out with more virus outbreak, with Google maybe expected in that headline we saw to have some issues, and some other gloomy headlines we looked at about the shale industry, etc. If fear is starting maybe to come back a little now, if that's what I thought, and I'm not saying that's what you need to think, but if that's what I thought, I say, okay, maybe I take a trade, I take a position and I sell on NASDAQ for whatever amount would make sense, right, for your balance. Then I say, okay, where do I want my stop loss? Not only when I look at the 1-hour candles, I'd want my stop loss above this resistance, right, up here to give it a chance to actually drop. Even if it tests this resistance, I maybe don't want to give up unless it breaks that resistance by what you might deem to be significant. But also I want to look at the resistance on the 4-hour candles, which was way over here. So I need to look at the 4-hour candles and say, I don't just want to be above this resistance, but I probably want to be above this spike so that I'm giving myself a wide strike zone. So I don't give up on maybe the view that it should pull back down. I don't give up on it too early. So I put my stop loss above this resistance level, which means it would have to break for me to give up one resistance level here and another resistance level here, 2 resistance levels for me to give up on my sell. Okay, so yeah, Emmanuel, exactly. That maybe you worded it better, giving it space to breathe, so I don't get out too early where we've all had it. It spikes through the resistance a little bit, hits your stop loss, then it goes the right way, and you say, darn it, why did I have my stop loss so close? Well, you can look as you look at the 4-hour candles that, okay, there's another level up just a little higher, that if it breaks that one, then I'm really wrong. If it breaks through both resistance levels, then I'll give up. Okay, that's maybe the concept of a wider strike zone. So maybe I put my stop loss somewhere up here above this resistance level and say, okay, let's take a shot at a pullback. Now, you might say, well, if I put my stop loss just above this resistance, I don't have to risk as much. If I put my stop loss above both resistance levels, it's further away. Now I have to risk more. And the point where I would say, no, you don't have to risk more to put your stop loss above 2 resistance levels. You just have to take a smaller trade if you don't want to risk more. Okay, you have to compromise sometimes. So if you want to stick to the same exposure percentage on the move, but you want your stop loss further away to be more patient with it, then you just have to take a smaller trade. Okay, which means you're compromising on the profit. You're saying, okay, I'll take a smaller trade. My potential profit then is smaller, but also now I can be more patient with my stop loss. I can put it further away, maybe above 2 price levels, and not have to try and be so perfect with my entry point. And sometimes by compromising on the profit, being willing to take a smaller trade size and have the stop loss a little further away, sometimes that patience can pay off because now I don't have to be so perfect. Okay? And I'm not saying that's the only way to trade. By all means, if you want to take a larger trade and have your stop loss closer, go for it. And you might be right. Okay? I'm not here to tell you what you should or should not do, but just explaining the concept so you understand the idea of widening the strike zone and taking maybe a smaller trade. Okay? My example here, I'm on a demo account with almost 100,000 in the account. So the fact that I put a one lot position, don't let that sway what size trade you should take, right? It's just an example on a demo account. You would want to take a trade size, whether it's 0.1 or something smaller, that makes sense for your balance, okay? And by the way, if you don't believe that there might be a reversal, you obviously could be thinking the opposite, couldn't you? What kind of pending order could I put up here in case it breaks through this resistance? What kind of pending order could kick in here if it breaks the resistance and confirms an uptrend? Yeah, a buy stop, right? A buy stop pending order. Okay. So, if I said, no, let's go to the 1 day candles or 1 week candles, and I say, I think if it breaks above this level, that it's going to climb even more. So you might say, okay, if it breaks above this level, I want to buy. And so you could have a buy stop pending order. All you have to do is double click, open, change from market execution to pending order, put your buy stop, put the price that you want to buy from. That would be a price above the resistance in this example. If it hit, what is that, 10,180 would be above this second resistance level, then that means it's broken through both resistance levels. Then maybe that's the spot you want to buy, 10,180, for example, right? And then my stop loss would be back below that, down to 10,000, I don't know, 110. 10,000, whoops. Let me do that again. 10,110. Okay. So there's my pending order. Now it's waiting. You see the green line here? That dotted line? That's my pending order. If it hits the price, or I'm sorry, it's actually underneath this red line. Let me slide that out of the way. There, you see it? See the green line? And I can move because it's a pending order. I can move where I want it. So if I want it just above that red line, well, let me slide it up. There. Now you see the green line. If the price hits there, it'll buy. So if it breaks the resistance, I'm buying. All right. And right now I'm selling in the short term, in the current market move. So in this example, I'm doing a market move in one direction, and I'm backing myself up with a pending order in the opposite direction. Okay. So if this goes and breaks through the resistance, I'm hedged. So I don't even need a stop loss on myself. I'm hedged. If it breaks through, I'm in on a buy. Now I'm one lot buy, one lot sell. I never had to put a stop loss. And then I can unhedge it when I see fit. Take away one or the other when I'm convinced of which way I think it'll go. So sometimes putting a hedge position makes sense instead of a stop loss. You see, I didn't put a stop loss on my market sell. And what I could do is on my buy stop, if it keeps climbing, my risk is covered. And if it drops back down below the resistance, I could have a stop loss on the hedge, right? Modify or delete, hedge trade, I could say, okay, I already put it, 10,133. So if it drops back below the resistance, let's say it breaks through, goes the wrong way, I get in on the buy stop, I'm hedged, my risk is covered. If it then breaks back below, it closes the hedge, and my sell position's still open and able to potentially profit. Okay, so that's an example of how to set up a pending order as a hedge. Okay, if I didn't want it as a hedge, I just wanted it as a separate move, then I could just put a stop loss on my live trade as well. I can modify the trade that's running and put a stop loss just above the resistance at the same spot that my buy stop would trigger. Okay, so there's more than one way to handle the same set of trades. The same buy stop and market move combo, I could set it up as a hedge situation, but that would be if I believe more in the sell than the buy. I would set up the buy stop as the hedge with a stop loss for when it comes back down, if it came back down. If I believe in each one 50-50, then I would put a stop loss probably on both of them. And if it goes the other way, I get out of the one, get in on the other. So you have to ask yourself, which direction do you believe in more when you're setting up a double move? One can act as a hedge and the other as stay in. Good question, Emmanuel. Question was, if you set up a pending order, can you close it at no cost? Absolutely. I could say, you know what? I changed my mind. I don't want to get in on a buy. I'm afraid there'll be a false breakthrough and come back down, and I don't want my buy stop to trigger. So I could just go here and click the X. That's it. Pending order's gone. Didn't cost me anything. It never opened. It was as if it didn't exist. So if I got rid of my pending order, well, then maybe I better put a stop loss on this one, right? So maybe I decide I didn't want the pending order set up to back up my risk. So I decided, okay, I'll put a stop loss. So then I say, okay, current price is 10,088. Maybe I'll put my stop loss 10,288. Okay, so there. Now I have a stop loss instead of a pending order to back up my trade, to risk manage my trade. Okay, good. So Georgios, you're asking about take profit. So there's a couple different things to think about when you're saying where's the best take profit. Some will always do a ratio. If I'm risking X amount to my stop loss, I want to risk 2 times X to my take profit, saying that I always want to have a potential profit of twice as much as I'm risking, or 3 times as much as I'm risking. That's one school of thought. And by the way, some will say I'm willing to risk, X distance, but I'll take my profit at half that distance. And you might say, well, why would you take profit at a smaller amount than you're risking? And the answer would be because then it's more likely to hit your take profit, right? If you're quicker to the trigger on the take profit and you're more patient with the stop loss, you might see your win percentage go way up, right? But then you have to be above 50% the profit if your take profit distance is shorter than your stop loss. So there are different theories with that, and there's no one right way to do it. There's no one right way. Now, in terms of what kind of logic might you use for a take profit? If you're not looking at ratios, it could be where's the next support level? And what do I see on NASDAQ? Here's where I would probably put my take profit. If I believed in a sell, let's say I did the position I opened already, and let's say I believe there's going to be a pullback, but maybe not huge. So I might say, okay, where's the first support level? And it's right here. You see? Support, 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 and up. So if it's going to pull down, the first spot, logically speaking, where it might run out of steam, if it does pull back down, would be just before this support level, maybe right about here. Okay? So a lot of times, and this gets into scalping, right? Someone was asking about scalping. This is more of a scalper's move to say, hey, first support level, I'm out. Okay, rather than being patient for a month-long move or something. So this might be a take profit level that makes sense. So where's that first support level? I'm just above it at 98.90. Okay, so maybe I go back and I say, okay, I put my stop loss. I'm going to modify this and have a take profit also at 98.90. Okay, and then I click OK, and there it is. It's right on that line I drew. Okay, you see the dotted red line is just in line with the line I drew that's above the support level. So my potential profit in this example is about double what I'm risking. Now, it just happened to work out that way because I was close to the resistance level, closer to it than I am to the support level. I'm using the first couple resistance levels to get my stop loss past it, and I'm using the first major support level that I see to determine where I might take my profit. Okay, now it just happens to be that the distance to that support level is further than the distance to my stop loss because we strategically used a technical analysis entry point below the resistance level. That played into our strategy. So now we're able to have a longer distance to the first support level on our sell than is the distance to our stop loss above the resistance. Okay, very good question. It's good to go through these steps for those who don't think about using technical analysis to determine the distance to their take profit. If you're just using a strict ratio, then you don't care where the support level is on this move. You just say, if my stop loss is 100 points away, I want my take profit 200 points, or whatever the case may be. I tend to be more flexible. I use the price levels on the chart to help me out with where I might take profit first and where my stop loss might be. Okay, very good questions. And so we're looking at NASDAQ here. Someone said it's on the European market. I'm not sure what point you're making. You mentioned a stock. If we have time, we'll take a look at that stock. There were a couple major assets that we wanted to take a look at first. So let's then look at we've got our NASDAQ move going. Let's take a look at Dow Jones. And I say our NASDAQ move. I should say a potential move that you might consider to do on NASDAQ if you wish. So now I'm taking a look at Dow Jones. It looks similar, doesn't it? In terms of reaching resistance. Okay, resistance here, resistance line here, and also hitting that level where it dropped from here and hesitating. Okay, there's some hesitation. I still think it could push through and test this resistance level up here. So in my opinion, I'm going to be patient if I'm banking on a reversal. Okay. Now, there's some questions about gold. Let's take a look. Let's take a look. Gold is very interesting. Look at the one-day candles. Look at this resistance level. Boy, is that nice. One-day candles, which means this resistance has been there a while. It hits the resistance here and drops. And then now look on Q. It hits the resistance and down it went. Okay, it's dropped a significant amount since it hit that resistance. What kind of simple pending order would have gotten you in at about 1262 and you'd be about $9 in profit per ounce right now? Simple pending order to sell from this one-day candle resistance, a sell limit. Good guess, Emmanuel. Sell stop is if you're selling from a lower point. The sell limit pending order would have gotten you in from this resistance level when it got near it. One-day candle resistance, you can see the advantage of looking at the bigger picture also, not just looking at 1 hour candles and smaller candles. We look at the one-day candles and we say, now I know why it dropped from there. Look, there's the resistance on the one-day candles. So now when we go to 1 hour candles, we say, wow, there's that resistance level right there from the one-day candles. And look how it dropped right on Q, right down. And that's no small drop. That's from 1262 to 1253 currently. That's $9 per ounce. A one lot position would have paid you $900 just from this resistance down on a simple sell limit move. Okay? Or on a smaller position still. That's a nice move. That's a good distance, $10 drop from a very predictable resistance level. Okay, we understand why gold was pushing up. There's been fear, okay? There's been fear about more outbreak. But boy, the markets were mixed today. The fundamentals were mixed. There's positive movement, some negative movement, some flat movement, some good headlines, some bad headlines. So it makes sense that a major resistance level, when there's mixed news, would hold like it did. It makes sense that a one-day candle resistance, when there's mixed news, maybe there's not enough momentum to break that type of resistance level. And you understand, the longer the resistance level's been there, the more of a reaction you tend to get when it nears that type of resistance level. So if you're looking at resistance that's only been there on the 1 hour candles, that's not as significant as resistance that's there weeks back on the one-day candles, like we just saw. Okay, and so this $10 drop in gold right from the resistance level, boy, a sell limit pays well there. Okay, and you could set up another sell limit up here in case it tests it again. And maybe you're quick on the trigger. If it hits and drops $5, maybe you get out. That's a scalping move, okay? Or maybe you're more patient. You'd still be in the money waiting for further dropping. It's obviously up to you. What we've noticed lately is that gold has actually been following the major indices. If you think NASDAQ's about to drop because it's on that resistance level and there's been some somewhat bad news, gold has actually been dropping as indices drop lately. It's been going up as they go up. Kind of bizarro land, because usually gold as a safe haven would go up when indices are dropping, or the opposite, but they've actually been following each other quite a bit. So that's been a pattern that's occurred since the pandemic hit. And greater fear has actually caused a lot of investors to liquidate gold to get cash in hand. So gold's actually been dropping with higher fear of late in these past months. And good news has had people say, okay, we'll buy back into gold and wait for the bad economic reports to drive gold up further. So good news has been driving gold up, and bad news has been driving gold down, generally speaking, over the past few months. And so with the idea that maybe NASDAQ could pull down some of the other major indices, then maybe you're thinking that makes sense that gold pulled down as well. Okay, just some ideas to think about fundamentally. Gail, good question. The question is this, and it may help others out too. Who determines support and resistance levels? And my answer would be the market. Okay, something in the market made it so that gold did not break past this level. Maybe it was economic stimulus that made people say, okay, I don't need to keep buying gold. There's lots of stimulus being announced in the US and in the European Union and in China, etc. And so whatever it is, it's something that actually exists in the market, whether it's stimulus, lower interest rates, whatever it might be, that actually causes that price level to become a resistance level in this example, or a support level in other examples. And so what does it take for a major price level to break? Usually new information, okay? Usually new information is needed for those price levels to break. And remember I said sometimes the new information, you don't know when it will come. It's the type of fundamental news many times that's unexpected, that's not predictable. That's why you could put a pending order up here on gold as a buy stop, just in case some kind of huge news comes that causes gold to break this resistance level. And you could be just waiting with your buy stop pending order up here, that if it breaks the resistance, whatever news caused that momentum, doesn't matter what it was, your buy stop would then trigger and you're in on a buy. And you could just have your stop loss back below that resistance. Small risk, large potential profit. Okay, so it's fundamentally driven most times when a major support or resistance level gets broken. It's usually fundamentally driven. And sometimes you don't know when that fundamental news might come. And that's why a pending order, in this example, a buy stop up here, could make sense. Just waiting for it to break with whatever big news might come. And in the meantime, you're trading off of what you know now, which is maybe there's a pullback occurring and you could be selling. So at the same time you were selling off the resistance, you could have had a buy stop pending order above it in case that goes bad. And in the end, even if you're just right on one, overall that could be a nice profit. Okay, very good questions. Yeah, Emmanuel, exactly. When we're looking at economic announcements, if you see economic announcements that were bad for a particular country, the currency listed with that economic announcement tends to weaken. If the announcement was better than expected, that currency tends to strengthen. Okay, that's exactly how traditionally those economic numbers as they come in, unemployment numbers, factory production numbers, PMI numbers, etc., on the economic schedule, as those numbers come in and they're better than expected, the currency tends to strengthen. If they're worse than expected, it tends to weaken the currency. Exactly. Okay, so we see the NASDAQ move that we put as a simulation. It's trying to drop. Okay, it's overcome the spread now, and now it's trying to drop off that resistance. Okay, and again, if you set it up the right way, you don't have to be nervous about a move like that. Take a trade size that the distance to the stop loss risks whatever percent is okay of your account, whether it's 1%, 0.5%, and then you don't have to be nervous about it. You let it go through to fruition to your potential take profit mark. And you don't have to wake up the next day and be nervous to check first thing in the morning. I always say, if the first thing you're doing the next day when you wake up is checking that trade that ran overnight, if that's on your mind, the trade size is probably too big. Probably more exposure than is smart if that's the first thing on your mind and you're so nervous about it. Okay. Let's take a look at some others before we call it quits. What's the trading code for that? You're asking me to look at the VK in France. What's the trading code? Hashtag VK? Let's see if I can find it. We've got a lot of stocks, and I don't have them all memorized. I'll look for VK. Here it is, VK France. Got it. Okay, this was a request, so let's look at it before we call it quits. We see a huge gap down at open, okay? Huge gap down at open, and then it continued to run downhill, okay? So that's an interesting thing. When you see that the direction of the gap just continued, okay? This is an easy strategy, by the way. When you see a gap at open, then what you do is you draw a line at the opening of the gap, and you say, okay, if it breaks back above the gap price, you buy, and your take profit is somewhere near filling the gap. Okay, if it starts to refill the gap, many times, not always, many times if it starts to refill the gap, it continues and refills almost the entire gap. So that's a technical strategy. When you see a large gap, if it goes back into an uptrend into the gap, you could trade to fill the gap and take profit before it fills the entire gap as a scalp. And then you also could trade with a pending order, a sell limit, that when it gets to the top of the gap, to ride it back down with a take profit just before the bottom of the gap. We saw that with oil, by the way, in the one-day candles for the past couple of weeks, riding up and down through the gap between about 35 and 40, 41 per barrel on oil. So this did not refill the gap, so you never would have gotten in on your buy position. A pending buy stop would have triggered only if it re-entered the gap. In this case, it would not have triggered. The other part of this strategy is if it breaks into a downtrend, then you go with the direction of the gap. Okay, in this case, downtrend because it gapped down. So gapped down and then went to a lower low and a lower high. As soon as it went to a lower high point, that's a downtrend, and that would trigger a sell. And so this is, technically speaking, not fundamentally, technically speaking, you would have gotten in here on the downtrend and you'd still be way in the money, okay? Where might you take profit? You would go to 4-hour candles, and I would be taking profit on a scalp right about now. Why? There's the support level. 4-hour candle shows support, 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 and it just reached that support level, okay? So that would have been a nice move after the open, going with the direction of the gap and maybe taking profit on the first support level. Now, if you believe it'll keep dropping, you could take a partial profit on the move and then continue with it if you think it'll break the support. Or take a profit, and if it breaks the support, you could have a sell stop ready to go if it breaks the support level. And by taking the profit, if it bounces off the support, you're not giving back the profit you made, right? And if it breaks the support, you get back in with the sell, potentially, with your stop loss then back above that broken support in that scenario. If you think the news isn't that bad, or you're just purely technical trading, Good question. How do you take partial profit? Okay, let's do a partial loss here. I would stay with this move all the way until it hits my stop loss. But let's say we are in profit. We want to do a partial close on this trade. So then I would do right click, modify or delete, and I would go change from modify to market execution. Now you see I have three options: sell, buy, or close. Okay, and it has the order number here, and it tells you how much you're closing. Well, what if I don't want to close one full lot? Let's say I want to close half of it. Okay, 0.5. So I'm telling it how much to close. Now you see it tells you right here, you're about to close 0.5. If I wanted to close 0.4, okay, now it tells me I'm closing 0.4, which means the rest is left open. You see? Now I have 0.6 open, and the percent of the profit or loss was now realized in my balance now for the part I closed, and the rest is still running. Okay? All right, great. I think this is a good spot to stop. I don't know a lot about this stock, by the way, but technically speaking, if you think this was just a temporary drop, you could trade up off this support level. It's right almost on this 4-hour candle support. And if it breaks the support, you get out with a small loss. It's a nice technical entry point if you think this might bounce back up. I think maybe there's a little bit of doom and gloom on this stock. With that type of gap down and then it kept running, I tend not to like to trade so much against that strong of a trend. That's a really strong movement down after a large gap down. So that's up to each individual trader. You might research this stock before trading on it, though, to know a little bit more about it. All right, great, everybody. Thank you for joining. Thank you very much for the good questions and the input. It really helps to give more information to, especially for newer people, because some of the questions are things I wouldn't have thought to cover. So thank you for the questions and the participation. Good luck on your moves. I think there's going to be a lot of movement today, especially still on the major indices as we pull up NASDAQ and some of the other major indices, still testing the resistance. Still did not break even the first resistance level. Okay. All right. Thanks everybody for joining. Make sure if you do any moves is because you understand the information. Okay. All right. Bye for now, guys.